first 246 years of our republic, we printed $10 trillion. 246 years, $10 trillion. Then in 18 months, we printed $10 trillion. If you doubled the money supply, what should have happened to the dollar? Should have gone down in half, exactly. What should have happened to the price of Bitcoin? Should have doubled. That's exactly what happened. Well, but it didn't just double. Yes, it did. It was about 13,000 before. It's about 26,000 now. It perfectly doubled. But it's down in the last few months. No shit, Sherlock. Have you seen this thing called Bitcoin futures? You can go to the day the Bitcoin futures ETF was approved. The day was the peak of Bitcoin priced in US dollars.
Within the past 2 years, Bitcoin, the largest cryptocurrency by market cap, has had a lot of turbulent price movements in both directions. First, it moved from an all-time peak of $69,000 per coin, an insane bull market rally spurred by a barrage of bullish events, including massive money printing by central banks and the 2020 halving. About 12 months later, the leading crypto asset was trading at $15,500 as a result of the multi-billion-dollar FTX collapse. Then it climbed rapidly to over $30,000 as depositors rushed to exit a failing U.S. banking industry in April. After a couple of months of further downside moves, Bitcoin spiked sharply again after BlackRock, the world's largest asset manager, applied for a spot Bitcoin ETF. Critics and enthusiasts alike have pointed out that the entire cryptocurrency industry has largely remained stagnant price-wise in 2023 as a result of the Federal Reserve's aggressive rate hike campaign. Crypto advocates like Real Vision Raoul Pal, macro conditions have stronger effects on crypto prices than the underlying fundamentals. According to the former Goldman Sachs executive, cryptocurrency prices have been and will continue to be correlated with the global business and liquidity cycle. Pal believes that as governments keep printing money, cryptocurrency prices will keep rising, which will then give room for underlying fundamentals like scarcity and network effects to cause further spikes. However, renowned hedge fund manager Mark Yusko takes a slightly different approach to analyzing current macro conditions and how much they impact the cryptocurrency industry. Yusko was recently a member of a three-man panel at the just-concluded Permissionless DeFi event hosted by Blockworks in Austin, Texas. Alongside Yusko, Jurrien, the director of global macro at Fidelity Investments, and Jim Bianco of Bianco Research, discussed the current macro conditions in the United States and how they impact the prices of Bitcoin and other crypto assets. Timmer posits that macro events obviously impact crypto prices, which is why we saw such a huge spike in Bitcoin prices when the Fed started printing to cushion the effects of the pandemic. Timmer also points out that Bitcoin has lost most of those 2021 gains since the Fed started tightening, concluding that the leading crypto asset needs better macro for its adoption curve to re-accelerate. For Bianco, the major threat to Bitcoin and other crypto assets is how attractive certain TradFi assets like treasury bonds have become in the current high interest rate environment. Yusko takes a refreshingly different perspective on the issue of macro and how it affects Bitcoin. According to the renowned hedge fund manager, one Bitcoin will always be one Bitcoin, and macro events are only a fleeting distraction. We will now bring you clips from this fascinating discussion. Please watch, share, and like this video. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks and enjoy the video.
I wore my, Keep Calm, We'll Print More t-shirt for the macro panel. And yeah, macro matters, but it depends what we're talking about, Jack. So you asked the question about Bitcoin, does macro matter to Bitcoin? And while I'll never argue with Jurrien because he's forgotten more about macro than I'll ever know, I'll just say that no, it doesn't, in the sense that one Bitcoin is one Bitcoin. It always will be forevermore. But we don't price Bitcoin in Bitcoin. We price Bitcoin in other things, other pieces of toilet paper. So if you happen to live in Turkey, there's never been a bear market in Bitcoin. Not ever, because the lira just went to shit. And if you live in Venezuela, there's never been a bear market in Bitcoin because the bolivar went to double shit. And if you live in Argentina, now with talks of devaluation, again, Bitcoin just goes up. Now Bitcoin goes up and down in the U.S. partly because of this, right? So in the first 246 years of our republic, we printed $10 trillion. 246 years, $10 trillion. Then in 18 months, we printed $10 trillion. Come on, someone shudder a little bit when I use the T word. Y'all know what a trillion is, right? Y'all math majors, I'm gonna shut the doors, make you sit here with us for 31,710 years, which I promise would be most unpleasant to listen to me for that long. And you gotta spend $1 every second. That's 1 trillion. So 10 trillion, we printed 10 trillion. You can go to the day the Bitcoin futures ETF was approved. The day was the peak of Bitcoin priced in US dollars. Why? Because just like gold, anyone looked at gold since the pandemic? Gold should have doubled. Read Chris Wood, okay? Gold has been the perfect store of value for 5,000 years. It's a long time, but it's been flat, dead flat at 1,900 bucks. Why? Because it gets spoofed artificially manipulated by JP Morgan, and they get fined every year $1 billion. And they're like, yeah, well, we made 20. It's the cost of doing business. You keep fining us $1 billion and we'll make 20 and we'll be happy. And they'll keep the price flat. So they've artificially suppressed the price of Bitcoin over the past few months. Why? Well, because BlackRock wants to buy it really cheap. There was a great meme the other day. Please don't sell your Bitcoin to BlackRock. Please don't be that person. But that's what's happening. And everyone's like, oh, when's the ETF going to get approved? And what's that going to do? It's going to get approved when JP Morgan and BlackRock decide it will be approved, just like GLD was held up for 2.5 years until JP Morgan could get short enough gold. So all of this goes to my last point, which is the title of the panel, does macro matter? I mean, she stole our thunder saying probably, yes, probably. But actually, in our world, no. Crypto, digital assets, whatever you want to call it, actually are uncorrelated with traditional assets for macro reasons. Stocks and bonds are highly correlated, along with currencies and commodities, because they derive their value from the same things. GDP growth, inflation, interest rates, and corporate profits. Those 4 things have nothing to do with Bitcoin, Ethereum, Solana, anything. Nothing. Those things are driven by millennial adoption, okay? The tech itself, the regulatory environment, and changes in monetary supply. So there's a little bit of linkage there.
Discussing further, the panelists explained that Bitcoin is basically about the adoption curve, which is driven by the built-in scarcity and decentralization. However, they note that regardless of how big these underlying fundamentals are in driving adoption, Bitcoin is still a network asset, and the value is driven by the growth of the network. If current macro conditions are making Bitcoin's network growth slower than expected, then it is expected that price actions will generally remain the same until there is a big break in those macro conditions. The good news, according to Timmer, is that real rates, which he says are one of the major drivers of macro, don't typically go much higher than where they are now, and the Fed is close to the end of its tightening cycle. The chartered marketing technician adds that we can start looking towards a better and easier crypto cycle with a certain re-acceleration of the adoption cycle. Let's get back to the interview as Mark Yusko talks about inflation, money printing, and the banking industry.
Interest rates are rising not because of inflation. There's no inflation. Inflation is caused when there's excess demand and limited supply of a good or service. What we have is currency devaluation. When an empire ends, the reason it ends is because you consolidate the power at the top with your cronies, and you go on a spender, on a binger, and you spend a lot, and you don't have any money, so in the old days, you would go out and conquer other nations, and you take their stuff to pay for it. We can't do that anymore. It's frowned upon. And so what do? You just issue debt, and you stuff it everywhere. We stuffed it in the banks. Like literally, the banks were required to buy treasuries. Well, that was not a problem as long as interest rates were low. In fact, it was free money. JP Morgan had 0 negative trading days for 3 years. 0. Anyone ever trade with 0 negative trading days? If you talk to me, DM me, we'll go in business together.
To be clear, what he means by 0 negative trading days is every single day for a year, they made money trading.
Every day.
Are you 252 for 252 in your trading?
No one.
There's 252 trading days in a year.
And so
JP Morgan is.
Yeah, JP Morgan.
Is it because they're good?
Yeah.
Or do they have some help there?
Well, no, it was a guaranteed trade, right? Because anyone here ever borrow at Fed funds? Nope. No one does, right? Who borrowed at Fed funds? The banks. So when Fed funds were 0, the banks would borrow at 0, and they would invest in treasuries at 2.5%, 3%, riskless trade, levered up 11 times. Awesome. Awesome. Why do they do that? Because the banking system was bankrupt after the global financial crisis, so you had to re-liquefy the banks. So you re-liquefy the banks by holding interest rates at emergency levels, even though there was no emergency. And then what happens? Well, then the bank's balance sheet gets fixed. Well, now they want to make some money. We can't make any money if interest rates are zero. So we're going to raise interest rates. So anyone's deposit rate go up from zero? It's funny how that works. So they're still paying you zero on your deposits, and now they're lending, well, to anyone who will borrow, but there's no demand. But the few people that are borrowing that need to borrow are paying 6, 7, 8%. So NIMs have exploded, and bank profits are up. And banks, up until 2 weeks ago, were up 30+% this year. Now they've rolled over because people are kind of seeing what's happening, which is overall liquidity is actually contracting because best laid plans are you get everybody psyched about low interest rates and you get the economy back humming, you lie about the recession. There was a recession in 2022. Full stop. 0.9% year-over-year growth is a recession.
According to Mark Yusko, the U.S. Federal Reserve has kept hiking rates despite signs of severe cracks in the economy to further strengthen the books of too-big-to-fail banks like J.P. Morgan. He notes that every metric the Fed uses to measure the strength of the economy is faulty and deliberately rigged to fool Americans. He gives an example of non-farm payroll employment data, which have been revised down every single month in 2023. According to the Bureau of Labor Statistics, the change in total non-farm payroll employment for June was revised down by 80,000 from 185,000 to 105,000, and the change for July was revised down by 30,000 from 187,000 to 157,000. With both revisions, employment in June and July was 110,000 lower than previously reported. Yusko explains that since no one is interested in restatements and adjustments, the Federal Reserve and their bank buddies will keep getting away with their continuous manipulation of the economy and asset prices. He adds that that's why banks, especially behemoths like JP Morgan, are charging such high interests on loans and giving out next to nothing in deposits. What are your thoughts on the video? Do you agree that there is ongoing heavy manipulation of prices and economic metrics to keep the populace fooled? Please drop your replies, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.